These are 10 of the top growth stocks right now for 2025. They've beat the market and combined earned more than $128 billion this year. In this video, we're covering all of them and saving the best until the end. Starting with number 10, Ulta Beauty. Ulta Beauty, trading under ticker symbol Ulta, is the $20.5 billion specialty beauty retailer in the United States. Today, it's trading right in the middle of its 52-week high and low. Right now, Ulta's owned by 4 super investors. Until recently, this was a buy from Berkshire Hathaway, though likely not from Warren Buffett, but one of his 2 lieutenants. Compared to their historical valuations and their ability to produce earnings and cash flows, especially when considering future growth. That's part of why a GF value for the company comes in at $541 per share. That's up nearly 21% from today's stock price. We're looking at top growth stocks in 2025. Most of these businesses are deeply entrenched with well-established moats. Based upon their high growth and the huge amount of money they earn, they may be interesting companies to look at. Plus, there are some themes on our list that are going to stand out to you and may surprise you. Keep in mind though, the video isn't financial advice. It's not a buy or sell recommendation of any security. Use common sense and do what's right for you. Now, let's keep looking at our list. Next at number 9, we have Veeva Systems, trading under ticker symbol VEEV. This is a $35 billion company trading exactly in the middle of its 52-week range. Veeva creates software solutions for the life sciences industry, namely a CRM and a content management platform. Compared to their historical sales multiples, the company may be trading cheaply. It's out above its current earnings and free cash flows, but that may be too expected with some of these high-growth businesses. Their GF value comes in at $235 a share, which is up $25 or 10% from today's current prices. At stock number 8, we have Copart. The $56 billion company trades under ticker symbol CPRT. Right now, it's just a handful of dollars off of its 52-week high. It had a stock split back in 2023 that's poorly reflected here. Copart operates online vehicle salvage auctions, and it acts almost like a utility for the automotive and insurance industries. Right now, there are 5 super investors who own Copart. This is led by David Rolfe of Wedgwood Partners with a 5.4% position. Copart's grown steadily in its past, however today it looks like it's trading out above its sales, earnings, and cash flow numbers. Still, this is a very high quality business. That's why a GF value comes in at $51 per share. That seems to be within a fair range for the company. Then at number 7, we have Atlassian, trading under ticker symbol TEAM in the United States. It's a $65 billion company trading $40 below its 52-week high. Atlassian's an Australian-based company that produces a software platform for IT and project management tools. Right now, 2 super investors own the stock, and this is led by Viking Global Investors with a 1.7% holding. This is a high-growth business, and there are some big growth assumptions in the company. Again, their current cash flows wouldn't support this valuation, but their $250 GF value is relying on future growth, and it looks like the company seems to be fairly priced. Stock number 6 is Palo Alto Networks. This is a cybersecurity firm trading in the United States under ticker symbol PANW. It's a $122 billion market cap, and it's down $22 from their 52-week high. Right now, no super investors own the stock after Lee Ainsley sold out of it in the latest quarter. But since it went public in 2012, it's been one of the top performing stocks in the last 13 years. However, it's trading well above their historic sales and their projected free cash flows right now. That's part of why a GF value only comes in at $142 per share, which is down 27.5% from today's current stock prices. Cracking the top 5, at number 5 we have Lam Research. This is a $94.5 billion giant trading just $2 above its 52-week low. It trades under ticker symbol LCRX. Lam Research is one of the world's largest semiconductor wafer fabrication equipment manufacturers. Say that 10 times fast. It's a necessary component in chip making, and its largest customers include TSMC, Samsung, Intel, and Micron. There are 4 super investors who own Lam today, and this is led by Chase Coleman and David Tepper, who each have around 1% of their portfolios invested in the stock. The company trades above its historical sales and their cash flows and earnings. However, when we look at the growth for this business out into the future, they come in well below their DCFs for both free cash flow and earnings based. However, the semiconductor industry is cyclical. That's a major reason why a GF value only is $60 for the stock. That's 20% or $12 below their current price. Now then, growth stock number 4 is the largest semiconductor wafer fabrication equipment maker in the world. This is Applied Materials, trading under ticker symbol AMAT. It's a $136 billion giant that's $14 above their 52-week low. There are also 4 super investors with holdings in Applied Materials. This is led by Berkshire Hathaway director Chris Davis, who has 4.7% of his portfolio in the stock. Compared to their peer Lam Research, their valuations look even better, especially when we factor in some future growth for this business. Whereas Lam may have been slightly overvalued, it looks like Applied Materials is closer to that fair value range, coming in just $10 above their GF value. Stock number 3 is one of the most controversial stocks in the entire market. This is the Chinese retailer, financial services, and cloud computing giant Alibaba. Alibaba trades under ticker symbol BABA, and it's a $204 billion market cap. Today, its price is $17 above its 52-week low, which is down $40 from their 52-week high. Alibaba came onto the radar of most investors after the late great Charlie Munger bought it both for the Daily Journal and for the Munger's family personal portfolio. However, in Charlie's final interview, he called it the worst trade of his life, even though Alibaba's still a pretty good company. His words, not mine. Today, 7 super investors own Alibaba, and this is led by Michael Burry and David Tepper, each of whom have huge positions in the stock. The numbers and valuations for Alibaba look potentially very cheap. They're trading at less than half of their projected free cash flows and way below their median price to sales. Right now, the stock is actually at its Graham number, which is a pretty defensive way of valuing companies. It's not much surprise then that with a $100 GF value, their stock price comes in $15 and 15% below their fair value. Now, growth stock number 2 on our list is Salesforce, trading in the US under ticker symbol CRM. They provide CRM and other softwares to enterprises. This is a $324 billion market cap company that's down $38 from their 52-week and all-time highs. 11 super investors own Salesforce right now. This is easily led by ValueAct Capital with a quarter of their US portfolio invested in the stock. Salesforce looks like they trade above their projected free cash flows, earnings, and their sales just slightly. They are below a DCF valuation for their free cash flows, and they're right at about their earnings. This is a pretty mature company with a longer track record of growth, so there may be some more predictability here. Their GF value ends up coming in $70 below their current stock price. Now, are you ready for the top growth stock on our list? This company is going to be pretty surprising, especially because it doesn't always make flashy headlines. It's the home improvement retailer, the Home Depot, trading under ticker symbol HD. The $390 billion market cap company is right between its 52-week high and low. Home Depot doesn't always post eye-catching numbers, but their growth has been very consistent and pretty steady over the years. This comes from the modest pace of new store openings and a bigger change in same-store sales. However, that's come down from their pandemic highs, and it's actually negative in the last year. But that's a trend that can likely pick up in the future. There are 7 super investors with a holding in Home Depot, and this is led by Tom Gaynor of Markel with a 3.4% position. Compared to their numbers, Home Depot looks like it's trading just a little bit above these. And their GF value comes in at $340 per share, down $48 from their current stock price. Remember also, Home Depot is a dividend growth stock. They pay a market-beating 2.3% dividend yield, grew this 7.7% last year alone, and have grown this 15 years in a row. A lot of their growth goes directly back into shareholders' pockets. Let me know if you want to see a future video on any of these businesses. There are plenty of tech and semiconductor stocks, but also some interesting companies as well. If you enjoyed the video and you want to support the channel for free, click the first link in the description. This will take you to Global Values affiliate Interactive Brokers. Thanks for watching and have a great day.